evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for the 14th of May in 2020. And we had a rally today, but it's a Thursday, so just about all the Thursdays are rally days. Feels that way, doesn't it? But we're still in our critical level in the S&P 500, as seen here on the daily chart of the S&P futures. We'll take a look at our profile, but first let's go back to our SPX chart and just take a look at our major level. And that remains the same. It is this 800 or 2850 and about 2900 or a little bit up to here, 2950 or 40. And that's a little volatility box or a multi-year pivot. It did serve as resistance in 2018 two times before the market fell like that, 1, 2. And it served as a little small pullback at the earlier part of 2019 and support at the later part of 2019. So here we are back into this spot, and this is our key pivot, which is going to determine whether or not this is the top of the range and the little new bear swing takes us back maybe to 700, maybe to 600, or if things really start to go the other way, all the way down to this 2300 print. That's the downside case. The upside is just Fed's got your back. And if the market crests, breaks, trades above the 2950, which is roughly here, and really I'd say above 3000, that's going to send the market even higher, but we are in neither of those positions yet. This still remains a pivot, turning point, and the key focal point going forward. Similar levels exist on the other futures contracts. Just kind of quickly, on the Nasdaq, it's still strong. That's in part because tech remains strong, and the Dow, its level is roughly 24,000, and the Russell keeps being weak. These are weekly charts, by the way, and that's staying put between the 1300 and 1400 print. That's the bigger picture. Let's now take a look at these ongoing strong stocks getting stronger. So if, for example, we discussed this, I think, last Thursday's video. If, for example, you are really bared up, and I understand that I have bear positions too, but if you are bared to the hilt and not hedged, consider some bullish options to put into your portfolio. And it's not necessarily betting on a bullish break, it's protecting yourself in the event that the market picks up steam and we plow straight through 2900, 2940, and really above 3000. That will result in financial losses if you aren't prepared for that. So a couple of names that are strong stocks getting stronger, they keep getting bid to the upside. These are names from earlier in the year, really, I guess a month ago in February or March. We were talking about these bullish candidates, and these are our typical names that are strong stocks getting stronger. And we highlighted these here. It's just a general scan. You can scan for strong stocks getting stronger, yearly lows, yearly highs, or just any type of new 52-week high. Many ways to scan for those candidates. I'm scanning in the S&P 500. We're looking at another candidate that came up here in really March, honestly, March and April, that General Mills, if y'all eat cereal and little household goods and consumer staples, canned soup, they make some of those. We talked about Campbell's and some other stocks like that. General Mills was one of those candidates, and it peaked into our list here. Big pullback, and then made higher highs as the market continued, as the months continued. And it showed up on the list here earlier in April. It's back on the list in May. So how do you trade this type of stuff? How do you hedge? How do you prepare? We would recommend in-out spreads or bull call positions when a strong stock pulls back or retraces, touches, trades into its 20-day exponential average, or some type of pullback. You don't have to use the moving averages necessarily, but when a stock pulls back, that's going to be a good time to get long. And that's just a risk management procedure. So GIS, General Mills, is that strong stock getting stronger, but it is probably due for a pullback. That's, if you're curious, it's going to be a consumer staples stock, and that'll fall under the XLP ETF for staples. Foods and drinks, essentials really. Even if it's a pandemic, we still have to eat and drink. Cereal and soups, a big part of that. Another stock that made sense. Stocks trades don't all have to make sense, but it, to me, honestly, is a little bit better. At least I have more confidence in the trades when something makes sense. So we talked about that. Netflix, particularly, made a higher high. Again, same type of concept after the initial fall. And that took just about every single stock to the downside. But Netflix recovered very, very quickly. Remember, the markets have not recovered. They've not made new highs yet in 2020. But Netflix not only did so here, but that gave us a pullback. And just recently, a good call spread or call type of trade or intraday purchases along the way back to the prior high. So Netflix has appeared on the list again in today's scan. And that's just a strong stock getting stronger. It doesn't have to make sense, but to me it makes sense. If people are locked at home, they're safer at home, they're going to be watching Netflix or Disney or Hulu and little online streaming services and movie products like that. Can't go to AMC, can't go to the movie theater. Got to watch those films at home, and Netflix is one of those providers, and it continues to get new subscribers. So that, in terms of stock, what do we do with that type of thing? That's a bullish opportunity, and that's one that aligns the charts, uptrends, higher highs, higher lows, pullbacks, with the fundamentals, which is if we're stuck at home, we are going to be watching TV. And this is one that I don't really recommend trading into, but it did show up on the list. It is Mccormick, and that's a spice. Sort of joked today that people, if they aren't going to restaurants, they're baking at home. And that means they're purchasing spices. That's, I guess, the logic with this one, but still, Mccormick did, MKC, just made a new 52-week high. And that's a strong stock getting stronger. That's quite the recovery off of this COVID or coronavirus sell-off low. Took the stock from about 115 to 175. That also is going to fall as a spice stock. That's under XLP as well. This one we talked about in my session, and it's not really a corona or virus type of stock, right? You don't stay at home and then mine Newmont mining. You don't mine for gold out of your house, but this is a mining stock. It continuously shows up in strong stocks getting stronger lists. That's been the case for a while. After some consolidation in 2017, 18, 19, Newmont Mining, NEM, it's a gold miner type of stock, but it continues to get stronger. So we want to play into that as best as possible. So short-term time frames, that's intraday tactics. For bigger picture traders, those are pullbacks, retracements, flags to the rising moving average, or just type of in-out spread call positions. So again, this is not necessarily jumping out and saying you need to go out there and get long off of lots of stocks. It's just consider what might happen if the market shatters resistance, starts to trigger a lot of stop losses, hedge funds start to cover their short positions, maybe purchase back some puts and try to get some calls or hedge, and the market can go straight higher. That is a possibility for the S&P. Going back to this, even though it's a resistance level, even though just about every headline you look at is negative, and we had some good down days this week, today was a sharp reversal to the upside. So just, I'm with you. I understand. We have a lot of bearish positions in play generally, and the thought process is there. But we also need a little bit of bullish positions to counteract them or to hedge against them. We don't want just a full delta negative portfolio. Have at least a handful in case something goes right or in case the market starts to rally, and that will limit some of the losses to the downside. Or just if you're of the opposite mindset, right? We're very broad here in the TheoTrade community. Some people are very, very bearish. Some people actually are very, very bullish. And they are confused when we say the words, be careful, be safe, protect yourself. The market's going to go down. They just think, well, I don't see that happening. So they're bulled up. So whatever you fall on that spectrum, or if you're just neutral and not trying to pick a direction, that's going to be a lot less stressful. These trades for stocks that are getting stronger probably will outperform in the market rally and others like it. So just keep those in mind. Continue watching your positions, monitoring open positions and levels in the market such as 2,900, 2,400, and right now the 2,750 or 2,800 bound. One of the two things will happen. We'll trade all the way back to the high, call it the lower probability outcome, but still possible, or maybe back down to lower levels. I think that's the majority standpoint. So if you are positioned in that direction, you're with the majority. And just but certainly watch what happens in the market and don't get too biased if the market starts to go to the upside. That's going to have to manage the risk, and some positions put on now can help with that type of unthinkable but a possible scenario. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly Video for May 14th, 2020.